Hey folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, guys, let's get into the action today. Markets are trending higher across the board. A little bit of a float higher after yesterday's sell-off. It's interesting because we're hovering right around the same pivot from yesterday's high. In fact, that's become the new support line. You can see, again, if you take a trend line, just draw it across. We initially came up to it, stalled, broke through, pulled back, and then we've now established ourselves hitting that over the last hour or so and still staying above it. So look for that to be the pivotal level in this market. All right. In relation to trading today, folks, I just took some big profits off of Valero. Take a look at Valero today, getting crushed down $2.75. I took half of my position off the table for a gain of $3.15. Now, the beauty of this trade that I gave out to Research Center members here at InTheMoneyStocks.com, time-stamped with my exact entry on it, and everyone got the alert that I entered it and followed me in. We shorted it yesterday morning at $45.35, near the highs of the day. The key was this bear flag. See this in spirit of bear flag right here off of the down move? This is a beautiful pattern up into the 20 MA. This is a high percentage shorting opportunity, which we took. And again, sure enough, paying huge dividends here. Again, 7% profit, folks, in 24 hours on Valero. I mean, even in my best case scenario, I didn't think in 24 hours we'd get 7%. But nonetheless, there it is. Break even stop second half. Let's ride this baby down a little bit further. The ultimate target for me will be a move down to about the 39-ish level, 38.95. Gap fill right here. And in all fairness, it's already over halfway there at this point in time. And just a little tidbit I wanted to note to people out there watching these free videos, folks. I go over some of our brief methodology. I go over some brief ideas and some thought processes and some levels and charts. But don't fool yourself. You're not going to get the exact calls that I'm giving to our paying subscribers. All right, we charge $50 or $49.99 for our elite membership here to the Research Center, which is for more swing traders and investors. And those people that pay are going to get the expert analysis. They're going to get the exact calls. All right, if you, again, are watching a free video and expecting to make money off of it, honestly, you're probably fooling yourself a little bit. Yeah, I give out great information in here, but the essence of the methodology, the exact calls, the exact timing cycles, all of that is going to be given to Research Center members here at InTheMoneyStocks.com. And it makes sense. I mean, if you think about it, you can't fault us. That's what they pay for. I mean, they're paying for it. Obviously, I'm not going to give it out for free. They deserve it. And anyone who isn't a paying subscriber doesn't deserve it. I mean, it's just that simple. There are a lot of pikers out there that kind of think that they can get it for free and weasel their way in. But in all fairness, they're never going to be able to get as much as our subscribers will and make nearly as much money as what our subscribers do for $50 a month. So going back to the charts, this is a good example right here. Valero, we shorted it yesterday morning, paying us off 7% today initially, and most likely should continue down. This bearish pattern actually should continue down with a small support level at the gap window, which is what it hit today. Once it breaks through gap window, it's going to go right to this gap fill on the charts. Now, again, I have other shorts out there. I've talked about it with you guys, even in these free videos. I mentioned them. I don't give you the exact entries, but nonetheless, they're mostly getting a bounce today on the day based on the market being up, and that's okay because, again, as long as you have the entry, you have the cycle down, you have all of those factors down, you know that ultimately they will pay us off all like Valero. All right, let's go over a couple other things here. If we go to the spiders chart, notice here on the spiders chart, you've pulled off the highs of the day. Little trend line right up here of resistance. The upside level on the SPY today or even in the future days, your next major resistance is going to be 157.52. That's the all-time high the SPY was ever at. All-time high, 157.52. And again, if I go to the monthly chart, you can kind of see it on the monthly here. If you go back to 2007, I can zoom in a little bit. See this little pivot high right here? I think it was on October 11th, 2007. That was your all-time high on the spiders, and we're still about 55 cents below that right now based on where we're currently trading. So we'll have to see again if that comes to fruition in the next few days. Either way, I do, and I am beginning to expect that rollover. Looked like it started yesterday. We got a nice little bounce today. Overall, I think it's that rounded top, the beauty of the rounded top, which I've discussed to members, which is exactly what seems to be playing out. Okay? Going into some other charts here today, the dollar is trading slightly higher. The UUP is trading up 5 cents on the day. So we're still in this area of resistance. So you can see we have support here and resistance up here. You're trading in a consolidation pattern here. Question is which way you're going to go. If you close below the 20, you break down here. If you break out above this pivot high right here, you should be headed towards the upside resistance level. Gold is taking a hit today. Beautiful fall on the GLD. GLD had a small bullish pattern that has now failed. Anytime you fail a pattern, expect a major move in the opposite direction. All right, major move in the opposite direction. So that's what overall what you're getting today. Short-term support on the GLD will be the 150 level, and then the even number of 151. Overall, based on a failure of a bullish pattern here, you would expect it to actually go all the way down to that 150 to 151 level, probably in the next few days. All right, just based on that failure. SLV has been a great short for members here at InTheMoneyStocks.com. This is another great trade I gave out in the technical analysis videos. I've been isolating this down for well over a month because of the bear flag here. As it came into the 20s, where I alerted members right here to look on the short side, look at that entry. I mean, if you shorted right here, I mean, you've basically been in the gravy zone the whole time as SLV collapses. And that's silver, obviously. That's the silver ETF. Your ultimate support is going to be down here. This is where you want to take all your profits off the table. And again, members just continue to rock and roll here and head towards the 25.50 level. All right? So that's what we're looking at there on that chart. Let me see what else we have here. JPM and Goldman Sachs bouncing today, so financials getting a little bit of a bounce. JPM actually looks like it's beginning to form a bearish consolidation pattern right here, folks. I expect this to trade up into the 50 and the 20 MA, and then once it gets in this range, you probably see another dip. This downside move has been very interesting to watch on JPM. JPM was the leader for the market for literally all of January, February, and even halfway into March. And then you had this bullish pattern here fail right there. See how the failure, you popped and started to break out? And then ultimately it came back in. That was a great failure signal, and that was really the signal it was going to go down. Once you fail a pattern, you usually put in a significant short-term top. So even on a bounce into the 20 or so, my guess is you'll probably get a good shorting opportunity. I will give this to members of the Research Center for those members that are with us. All right. Amazon getting a little bounce after being down over 5 or around $5, bouncing about 3.5 today. That's a technical bounce there. Apple, interesting chart on Apple, folks. Apple had a nice technical bounce early in the day, but look at this thing sell off. It's basically back to the flat line. And for anyone that likes Apple, I liked Apple from 420 to 470. And ever since then, I said, all right, guys, right around that 460, 470 level, make sure you have a good chunk off the table here because it looks like it could come back down. I actually believe that ultimately over the next few weeks to a month, you're going to see a break below 400 on Apple. All right, I mean, it's had a nice technical retrace, but I actually don't think it's done falling just yet. And I think we will see more downside in Apple over the next, week to a month or two. All right, what else are we looking at here? Let's see what else we have. Markets again continuing to just hover here. Google's having a very nice day. Good bounce on Google, up about $12 and change. Notice how it came down to the 50 MA. Beautiful top being put in there. And now you're getting the technical bounce. There's going to be a lot of resistance right here, guys. A lot of resistance right here. You're basically into it right here. Based on this price action, I wouldn't be surprised to see Google pull back tomorrow. Overall, even the market as a whole, I think there's a small chance or a decent chance of a little bit of a downtick tomorrow. I don't think anything big, but I think we're in this cycle right now where you have a down day, an up day, and down day overall forming a bigger top for further downside in the markets. And again, the key is to just play chart patterns that give you PPT setups. For those of you that are new, plunge protection is one way of looking at the PPT. That's the Federal Reserve's method. What we do is we isolate price, pattern, and time, or PPT, to give us a high percentage, 80 to 90% success rate trade on any chart out there. That's how we found Valero. I mean, Valero had a beautiful pattern at a price point, and that gave us the short. And as you can see today, what are we seeing? Valero's getting crushed, and we already took 7% in 24 hours off of that trade. Beautiful drop. I mean, look at this drop here today on Valero. Wouldn't it have been nice if you weren't in it to get into it right here where we got into it yesterday? I mean, literally right here is where we shorted it yesterday as members of InTheMoneyStocks.com. All right. Chevron and Exxon are seeing some weakness today, so those are down a little bit. But overall, again, it's mostly a positive market. Markets aren't up tremendously, but they're decent. Decent gains across the board. If I just look at the indexes here, we're seeing the S&P up 9 points, Dow up about 90, Nasdaq up about 21. So overall, it looks like the S&P is basically negating yesterday's move or a little bit more. Nasdaq is not negating yesterday's move, down 28 yesterday, only up 21 today. And the Dow had a decent day yesterday, just down a little bit, and that's having a nice little push today. All right. On that note, I'm going to step aside. I got to get back to trading and isolating. I'm going to be putting out more hot charts and alerts tonight, which are our swing trade alerts, folks. So if you're not a member of the Research Center and you want these alerts, these money-making alerts like Valero, just come here to InTheMoneyStocks.com, take the 7-day free trial, and learn how to become a millionaire overnight, basically. Take care, folks.